Hello everyone and welcome again to your weekend in review and look ahead. I am Will Hassel. Hopefully some of you saw my interview on Fast Money's CNBC's Fast Money. Me and a whole bunch of the Leaders Investment Club members were on there, so hopefully you check those out. So we had a pretty interesting week this week. Started off with a big sell-off on Monday due to the Ukrainian crisis and what had happened there. I fortunately was hedged, and I did on my last video go and mention about several different types of hedging techniques that you could have had. I'll talk about how those could have played out later in the video. Going to be a shorter video than normal today. Just going to go over some of the basics, ideas of what I see going on for this next week, and because we don't really have a whole lot of economic data, I'm just looking at some of the technicals here for the DIA, the Dow Jones Industrial Average. It's the SPDR. We did close at all-time highs, so welcome back to all-time highs. We saw a big kind of change up on Friday, mainly due to those non-farm payroll numbers. They were above expectations, and on Tuesday we got a bounce back just because we realized things weren't that bad. It was a very quick snapback too. Other than that, it felt pretty flat, I have to say, except for Friday and Tuesday and Monday were pretty much the only days where we had any type of real action going on, whether it be up or down. We are still kind of in an event-driven cut-off market, as we see. It did close above all three of its simple moving averages, both the 200, 21, and 50-day, going over to the SPDR. I would like to say to keep Ukraine in mind as we go throughout this weekend and into this next week, because the markets will be watching the Ukraine very closely, as we did see some talks on Monday about so-called Russian IBMs being tested, but quick research of that said that it was mainly really kind of a regular occurrence. We did fade quite a bit on Friday. A lot of this was because of this kind of over-weekend fears about the Ukraine. Did close above all the simple moving averages on the SPDR, and then the NASDAQ, which was kind of the laggard of the week, especially on Friday after we got into the peaks on Thursday. It was just kind of a downtrend, except for the pop. But you can kind of, and I'll even draw the trend line that we got going down here, as we see, along the lines of this, but then it kind of stabled out. Don't know why I drew that, but kind of stabled out right there. But yeah, it was the laggard of all three of the major indexes. And it did close below all of its, certainly the 200-day moving average, and was up above the 50 and 21-day. Some things that are coming out this week, we have on Monday, which is really Sunday night for those of you in the United States, we have Japan's fourth quarter GDP is released. That's going to be a market-moving thing, definitely for the current season as we get into Monday, because we really don't have a whole lot of data on Monday. No real big market-moving data. Something on Tuesday that may be in play is the February NFIB, which is the measuring of small business optimism. On Wednesday, we really don't have a whole lot other than John Kerry's is going and hosting a hearing based on foreign policy, so people are going to be paying attention to that. On Thursday, though, we do have some numbers like retail sales, both total and non-auto retail sales, and we are expected to rise at 0.2%. We have weekly jobless claims are released on Thursday as well, and Senate Banking Committee meeting, weighing the nominees of Stanley Fischer, Jerome Powell, Leo Brevin for the Federal Reserve Board. Also, as we go out through here, remember kind of this whole kind of interesting moves going on in the credit markets over in China. We have the Chinese solar company did default on a public bond, the first time ever in Chinese history. So, and on Friday we have the median forecast for the February PPI or February Producer Price Index is expected to rise at 0.2% increase, and a rise in 0.1% in the core figure, and then also the Michigan consumer sentiment number is going to be released on Friday, but we are expecting little to no change in that. Moving on more towards my performance, here I am long the QQQ, so I've already gone over there. There's Visa, there's AIG, AIG's ticker symbol does not have a dash on AIG, and JP Morgan. This is first time in a little while how all of my positions are in the green, except for HDGE, which is hedge ETF, as you guys know, which is a way for me to go and hedge my portfolio in midst of this volatility. But I'll get more into the performance of those volatility ETFs on Monday and stuff like that later. Just giving you guys a brief portfolio update. UH only made 15 cents so far, and AIG not that much, but hey, at least I'm in profit. JP Morgan really had a strong week this week, really bounced off of Monday's lows, and a lot of the other financials did as well, and that's what I'm going to be going over here shortly later on in the video. And it did clear above its 50 and 21 day moving averages. AIG had a strong week as well, really moving off of the lows on Monday. Only breached the 200-day moving average right there on Friday. These are 5-minute charts, by the way, if you can't read it up here. 5-minute charts is what I use. Except for when I'm actually have it all live up and I'm, trading on the day, then I have the 1-day chart, then I may sometimes switch them around. But, and it did close above its 50 and all of its simple moving averages. I do kind of like this little base that it formed with the 250-day, both kind of on that same little line there. AIG was a strong performer. I think they're going to do really well. Visa, I want to go and take the chart out a little bit longer ways to the 10-day. Really kind of broke off on Friday, and then that kind of led to the downtrend on Monday. You can, as we do know from Friday, was kind of that Russian crisis, Ukraine crisis beginnings, and then it just kind of kept on going until Monday. Hasn't broken above 266. Has not broken above 266, and I believe I highlighted that last time as a kind of a support level back from last week that then broke and is now resistance, as we see it not breaking above that, and that the previous levels it touching and going a whole bunch. But really, if we note on this last week, it hasn't really touched above that really. When we look at the chart, there's 266, barely broke above it, but then faded, tried to break, tried to go near it, faded down, and then just didn't even bother the whole rest of the time. Now, another key level that I went and saw was the 255.50 level, which we did break above at the final minutes of trading, but when we look kind of on Friday, trying not to move my mouse too much, but if we look on Friday at that 255 line, you just kind of have to watch my mouse as it extends. You can see how it kind of was kind of like it didn't break above that the entirety of Friday, except for the last couple minutes in trading, although it did kind of break above it right here, but then it went immediately back down. That's been kind of a key level. If I extend this over, even on Tuesday, it kind of hugged down there. But 266 is your nearest level of resistance. Support probably down around the 222 level. Not too sure about that support just because I can't really see it on this chart too much. But yeah, 266 looks like it's going to be big resistance point. We're going to have to hit above that in order to move higher in Visa. I didn't really bug too much about support and resistance levels for JP Morgan and AIG just because they're the financials. I'm going to get into that a little bit later. But in terms of JP Morgan, it is really close to all-time highs. So going to try and keep that in the back of your minds too. I'm just going to minimize those charts. I'm going to bring up Starbucks, which has been kind of wacky as of lately, and Michael Kors, and then also, instead of Visa, we're going to plug in Under Armour. As those of you know who did watch my interview on Fast Money, those were the two stocks that I did talk about. Wish I could have talked about more, but, it happens. Looking at Starbucks, it's kind of been a wacky performer this entire year. It's down about 6.5%, but it has been acting really, really weird. We've been kind of getting these kind of, well, there's Friday and Monday, so that's broader market, but then it's been kind of snapping up, snapping down, snapping up, snapping down. Just kind of weird action going on in Starbucks. Not because there's been any bad news or anything like that, just because that's the way it's been trading. It's been kind of this kind of, I've been talking about this a lot, the pairs trade of long coffee futures, short Starbucks. It used to be that reverse. You're long the coffee futures and you're short Starbucks. I mean, you're short the coffee futures, long Starbucks. I apologize, but it did get above $73 and closed above it on Friday, which I am pretty happy about. It didn't close above $73 on Thursday. It stayed kind of above all of its simple moving averages, and just going to try and look at some of the resistance support lines that we're going to be dealing with here in the short term. I actually think we broke above it, just looking at it. Here, I'll do a 10-minute, 20-day. That'll go and give us some more clarity here. Ooh, there we go for support. Right there, around 72.30, 72.27 is what I'm calling it for support. We look at this kind of floor right here, measure it out. There's another. It hit right around there again. And then it did kind of act as resistance when we look over here, but just trying to find the resistance level now, and I don't really. Probably 74 would be my next guess, just because looking at it over here, kind of touchdown. It was battling there for a while. Snap down, snap back. Battle was up above. Then it kind of hit around there, and as soon as it broke down, and just kind of declined. So really, Starbucks has just been kind of boring, and has just been kind of the traders have just kind of taken control of it, just doing as they will to it. Still a really good fundamental company. So there's Starbucks. Michael Kors has been in range mode. It's been in kind of I'm calling it the Apple mode, because as we know, Apple is a very range-bound stock. It's been range-bound recently this entire week. 99 to 98 has been your range, and look at how tightly it has been trading in that range. Sure, on Tuesday it broke above, then went below, but then it kind of snapped back into it. We've kind of had some positive candlesticks above 99, no real fills except on kind of Tuesday, while the rest have just kind of declined. And if we cannot close and hold above $99, we're going to continue this kind of range action. I did talk to some people on Friday about Michael Kors and the chart patterns. They say it's making a bullish flag. Probably looking out on the daily 1 year chart for that. They say it's been making a bullish flag. I'm not too good at the chart patterns and stuff like that. That's why I do it kind of on a little tiny basis as opposed to I don't ever say I'm a technical analyst. I try my best to try and help you guys out to show some of the things I see, But definitely, you don't really need to be a chartist in order to realize that it has been range bound in the 99 to 98 levels with some small pockets of kind of bouncing, some small little divergence, but mainly, Monday, I'm going to just take that out of account because that was kind of, everyone was down. Tuesday was in. Wednesday it kind of stayed in that range. Thursday definitely stayed in that range, and then Friday it stayed in that range, even banging on at 98, going lower there. So, once again, no real news coming out, but it's got to break out above 99 and have a close above it in order to get out of this range. Moving on to Under Armour. Kind of had an interesting couple trading days. Big kind of rangey too. 115 to 117. Ever since obviously our big resistance point, as I talked about in the last video, 120 here, because it hit it and then just snapped back down. I am glad that we are above 115 line, as we saw here, battling around it. Definitely was kind of a floor. So glad we're up above that. Next stop 120. Hopefully we can break that and it can continue higher. But I have no problem with Under Armour at this point. It did close above all of its simple moving averages. Kind of hugged that 200-day on after the initial up move on Friday. Really hugged that 200-day, and hopefully there's some more good news coming out of it, and then it continues on higher. Just gonna check my time real quick. So moving on to what I know has been, well, actually let's go into the hedges that I talked about. So let's just bring up VXX, short-term volatility, iPath, HDGE, which probably has been my favorite way of just hedging on this entire thing. And then I'll just throw up the dog, which is the 1 times bear on the Dow. As we see here, Monday was, well, that's a 10-day chart. Monday was the big up day for all of these guys. Not really too much on hedge, but hedge is a little bit different in the sense because it goes in, the way it works is it shorts a collection of stocks versus just a general market type of a thing. But it did kind of move in tandem with the market a little bit on Monday. Really did it on Wednesday. Am I sure about that though? Nope, actually that was on Monday. The chart is screwed up. Huh. Alright. I'll just do a 4-day chart. So there's Monday. Traded down, then kind of traded back up on Friday. As we see here, like the VXX did on Friday as well. Dog, kind of same patterns here. I do like hedge the best just because it isn't actively managed, although that does kind of cost you more, but I do like that aspect of it. I would recommend probably staying with some of these just because we could see some more short-term volatility, some short-term sells, especially since we're at all-time highs. Easy for the shorts to come in and bat us down from that. So I do kind of recommend this just because we don't really know what's going to come out. There's been talks that there's going to be no military action. We can suspect that there isn't going to be military action, but we never know in situations like this. So just, ooh, I actually like here as opposed to Dog, which stayed under all of its simple moving averages. Hedge and VXX did trade above those moving averages, which I do like. Kind of go into what I talked about earlier in the video and that's the trend that's been happening is the financials. Just throw up JP Morgan. I'll do GS, which is Goldman. Financials have really been leading the market, as we can tell from the XLF, JP Morgan, and Goldman. They were the best performing sectors out of the S&P this week, and the Dow as well. No real, if I remember right, the trade that was coming into Monday was long the XLE, which is the energy spider, and short the XLF on Monday. And then you swap those, except this is on a 4-day, and then people swap them. So that's what we think some of the big upturn was. But I really think it's just because people are liking financials now. They got bullied around a whole lot at the beginning of the year, and now people are really starting to like them. But those were the best performers, and typically, as goes the financials, goes the markets. We especially saw this last year as financials really led the markets, well, apart from some of the other things like 3D printing, but in terms of regular sectors, they were the ones that really led the markets. So this is kind of tipping me off that maybe we do see some higher highs and some new all-time highs as we go throughout these next couple weeks if the financials keep leading. Although we do not know what's going to happen here in the future with the Ukraine. That's why these weekends are kind of a little stressful, because we just don't know what's really going to happen. But keep an eye on the financials. Keep an eye on those ETFs that can go and hedge you out against sudden down moves. I like hedge the best because actually has a less rate of decay than VXX, which has a natural rate of decay. So it goes down almost all the. It goes down. Last year was 20. The hedge was down 20% versus the VXX 40%. Like Under Armour, like Coors, like Dow Chem. I'll just throw that up here just to show everyone. Like Dow Chem, even though it kind of lagged on Friday. If I remember right, it didn't lag too much on Monday. Thank you, everyone, for watching my videos. Follow me on Twitter. Follow me on StockTwits. I really appreciate it. Please, follow all my fellow Leaders Investment Club members. All really smart guys, as hopefully some of you guys saw on the CNBC interview, and even follow the guys that weren't on CNBC because they're really, really smart as well. Just because they weren't lucky enough to go and get an interview. I mean, I could have easily been swapped out by my friend Ben, Nolan, Alex, who's on Tasty Trade all the time. Everyone in the Leaders Investment Club is a for sure follow. They're all extremely smart people. And I'd just like to thank you guys once again, and hopefully I'll see you guys